knowing the general market dynamics, that's also obviously, a key factor in winning in trades. And what I mean by that, general market dynamics, market structure. I've taught I got a student that I literally just tossed out of my private group because he's literally teaching my private mentorship and teaching the 2022 model like it's his own, whatever. But he's online saying that I've never really done work with market structure. I've taught more about market structure than anybody has. And see, it's not just simply knowing higher high, higher low. That's not it. You need to know the dynamics from the higher time frame down the lower time frame, and then the lower time frame back up to the higher time frame, and how all that fits together. Market structure is one component. That's it. But when you understand it, all it needs to be done is reduce down to what I showed you in the model on 2022. That's the only element of market structure that you need to focus on. Everything else that everybody makes these courses and videos about, okay, you got higher highs, higher lows, higher high, higher lows, and then you're going to wait for that shift. Okay, you can draw that out on a line chart and show all these perfect examples after the fact, but you're not showing examples of it right now, real time, and doing a trade. That's what I have an issue with. And that's why I don't like people trying to teach my stuff, because you can do it in hindsight and sound smart, but you can't do it going forward, which means you don't know what you're doing. So you can't teach that. That's how you discern who can teach. Hear that? Got a bullet point list. ICT's been knocking them off. He's been really focused. I got a bullet point list here. I got some shit talking at the end of this video. Don't worry. The other part is seasonality, seasonal tendencies, the effects of when the market is more likely to produce large range moves on the daily chart. And there's a lot of volatility. As an index trader, you want to know when there are earning seasons. And you also want to be aware that during the summer months, now this hasn't really been true in the last 2 months. I'm sorry, the last 2 years rather. The typically the summer months, and when I say that, it's like July, some of June's good, but July and August, they can tend to be really just cruddy, real cruddy type of market conditions where you don't really want to be pushing it too hard. And it's better really to just take those months off. And that doesn't mean you can't find trades, and obviously you've seen I can do that too. But when I teach, okay, the detractors out there love to try to take one thing that I say and twist it up and try to make a argument out of it. They'll say, ICT says that he doesn't trade on Mondays. And here's my example of trading Mondays. Okay, I go out and trade Mondays. I'm just telling you what I like personally. Now, you can go out there and trade, every single day of the week. I've given you tools and rules to follow doing that. But I like to have a lot of things in my favor before I go out there and just try to engage, because my character flaw and my weakness is I want and aim for perfection. And you see in my entries, I'm in there on those high candles going short. And I'm getting out on those low candles when I'm covering the short. And I'm buying on the low candles and I'm selling at the high candles. You can't deny that. And it's matching everything that I teach. The logic is there. So if the shit didn't work, I couldn't produce that in live market conditions. Period. Gotta wet my whistle here. So understanding when there's the likelihood of having big moves, like for instance in spring, is a tendency for the market to draft lower in equities. Okay, so stock indexes or indices rather, they have a tendency to draw lower and be bearish going into the summer lows, and then going into a low in the fall time, somewhere between. I've seen it in years of my career where it starts a move in August, the last week of August, but generally it's like between mid-September and the first or second week of November. You're going to find a seasonal low there. And all you got to do is look for what I taught you in the core content. If you simply just use that model, look for index divergence, SMT divergence between the NASDAQ, this S&P, and the Dow. I don't trade the Dow. Okay, I don't care about the Dow for trading purposes, but I use it for an analysis. Like dollar, I don't trade the dollar, but I've always used it as a barometer for forex pairs. So it's going to be a diametrically opposed opinion held in dollar versus other currencies. Well, when you're comparing the three averages, S&P, NASDAQ, and Dow, and you're looking for a high to form, in the spring. You want to see a divergence. One of those indices is going to fail to make a higher high. That's it. You have now witnessed the quarterly shift. Now, everything after that, start looking for market structure shifts bearishly on all time frames and look for the pattern that I taught you in the 2022 mentorship. And folks, I just fucking gave you an ATM that pays out every motherfucking year, and it gives you the bias going all the way into the summer. That's it. That's the key. That's the fucking unicorn you're looking for. Well, how about in the fall? You're looking for the opposite because seasonal tendency wise, you're looking for a low to form. So one of those indices are going to fail to make a lower low. Once that occurs, what happens? That failed lower low in one of those averages, that's simple Dow theory. Once that shift occurs and they go breaking their short-term highs, you're now in a buy model. What does that mean? You're just looking for longs, and you keep milking the longs with the largest leverage. And you can take shorts, and you've seen me do that. But the bigger moves, the longer protracted candles on the daily and 4-hour charts are going to be to the upside after that occurs in the lows in the fall. So between, like I said, think like the second week of September to the second week of November. That's your little sweet spot. And what you're looking is you're studying kind of, you're like, can you back and tell me what you just said there again? I ain't looking at questions, but I'm sure it's probably what you're thinking. What does it look like? Where am I looking? What time frame? You're looking at a daily chart. You're looking for the highs compared between the NASDAQ, the S&P, and the Dow. Make sure I said that right. Those three averages, Dow, S&P, and NASDAQ. In the springtime, okay, April, May time period. In that time period, you're going to be looking for, as the market's going to be going up, it will be. It'll go up, and on a daily chart, one of those averages, and I don't give a flying fuck which one it is. I don't care which one it is. It's not a point of me knowing which one's going to fail to make a higher high. I'm just looking for that to occur. Once that happens, once that occurs, and then you start looking at the 1-hour and 4-hour chart to look for a shift in market structure, just like I taught in that 2022 mentorship. Once that occurs, you have watched the seasonal high form in the spring, and it's all downhill going into the summer months. Baby, if you don't know what that means, let me tell you something. Go back to your fucking charts. As many years as you fucking want, and just see how that is such a beautiful roller coaster into fucking profitability every motherfucking year. And you got clowns out there doing mentorships and signal services, and they're trying to buy all during that shit. And they're getting wrecked. They're getting destroyed, blowing out, and having to reset their simulator accounts. That's how the markets work, folks. And in the fall, on a daily chart, you're comparing the NASDAQ, the Dow, and the S&P. One of those averages are going to fail to make a lower low. All you're doing is simply waiting for that. You're simply waiting for that to occur. And once it does, go into your 4-hour chart or 1-hour chart and start looking for that shift in market structure bullishly. Once that occurs, you just watch the low form in the fall and just start looking for your best trades going long. You can, if you have not been trading at least for 2 years consistently, don't fade what I just gave you. Trade only in those directions. And you're going to get the biggest fucking moves you've ever had in your trades. And you'll be able to trust that they're going to move a lot more than just 5-trade Larry in fucking Texas that wants to get 5 ticks and thinks it's a big deal because he's got 24 contracts on it. No. Mm-mm. You want big fucking runs, big price runs. And I have students that are going in the Robbins Cup. I just gave you a beautiful blueprint to work within. Think about that. These are market dynamics that, I'll have people come in. Oh, everybody knows that. Okay, show me your fucking trades. Show me your executions going into next year. Do it. Because I'm going to be doing it. Oh, yeah, I'm going to be fucking doing it. Live accounts. Oh, yes, I'm going to be breaking fucking hearts. Motherfuckers are going to have their heads fucking smashed. Yep, your results are shit. I'm going to prove it. So we've talked about market structure. And the only importance really is knowing what I just gave you. That right there, that element of seasonality and how those shifts quarterly occur, one in the springtime for bearishness and in the fall when it's bullish. And what does it look like? The SMT divergence or Dow divergence, okay, where one of the averages diverge, and then you're looking at that shift in the market structure on a 4 hour and 1 hour chart. Once that occurs, once that fucking occurs, that is it. It's on lock. It's done. Then it's going to start grinding higher. You don't think it happened? Look at your chart. Why do you think I've been buying? Why I've been talking about it's reaching for relative equal highs. It's going up to an imbalance. This is SIBI. It's filling. That's why. That's why it's following that model. Those videos I produced in 2016. Well, no, technically that would have been 2017. Yeah, because it's closer to the August end of 2017 when the first mentorship group ended, and that core content was produced during their class. So yeah, it would have been, if I'm not mistaken, I think it's June. I don't know. I don't recall. I'm having a senior moment here. It's in there, but it's on YouTube now. But where I'm teaching how to find these like mega trades. Larry Williams coined a phrase called mega trades, where you find these big extrapolated price moves. And I was like, I want to know where they form, because in his teachings and such, he would show this and that, and I was part of this and I was part of that, and it didn't make any sense as to what was the real foundation of when did they occur. So I had to take a step back, and I said, okay, I'm going to go through all these fucking charts and run through with Super Charts, which is a program I used when I was a younger man, and TradeStation. And I ran all these filters through to find where there was a huge impulse for the markets to be sustained one direction for months. And when it was bullish, going up for months. Now, maybe there were, traders out there doing this, but nobody ever told me about it. Nobody said, only do this, because that's kind of boring. And nobody wants to write a book like that. They got to put 50 fucking indicators on there and different fucking harmonic names on shit, because that makes it, scientific. And if it's scientific, for fuck's sake, that means your in-laws are going to be impressed, right? So the only thing you need to know about market structure is those two things I just gave you right there. Sorry, WWA guys, you don't do that. Yeah, I went there. So the next thing you need to know is that narrative and bias.